Alrighty then. I'm so happy to be back. Today we have a very lovely guest. His name is Nathan Sloat. How are you doing?
I'm doing very well. Thank you for inviting me on this show.
Well, thank you for coming. We've had a couple. We've been trying to arrange for a little while, but it was just a little difficult. Everybody's busy.
Everyone is busy.
I mean, and if you're not busy, productive busy though.
Well,
It's not good to just run. Not to run. Busy is like the new cool thing, but I don't think being you got to be good busy, not bad busy.
yeah, I think a lot of people don't understand that.
Yeah, they definitely don't. So, Nathan, we've known each other for a while. Nathan is a accountant,
Public account.
public accountant. He specializes in U.S. tax code, which can be very, very complicated. And I always thought when we were growing up, they don't really teach you a lot about taxes in public schools. I always thought that should be like a mandatory thing.
Yeah, I agree. It's one of the most important things. I mean, everyone has to file a tax return. Although they have made it a lot easier with all the online sites that now allow you to prepare tax returns without going into a tax preparer, which a lot of people can use. Although if you have a more complicated situation, then I mean, I certainly still recommend using a actual tax preparer.
Is there a reason that the government doesn't include doing taxes in the public curriculum? Wouldn't you think that would be one of the defining things that they should teach children, or at least high school kids, because it's pretty soon, they have their taxes coming up.
Yeah, I agree. There's actually a lot of countries I think that actually do prepare your tax returns, and you send in the forms, and they'll actually do them for you, and they actually help out their citizens. Here we kind of leave them alone, and especially since the U.S. tax code is extremely complicated, it makes a very daunting task for a lot of people.
We're coming into an election cycle right now, so I mean, I always hear I'm not a huge into politics, but one of the defining, if I think it was Gary Johnson, his big thing is that he wants to simplify the tax code. Why is the tax code so complicated in America?
So many special interest groups, and especially since they control a lot of what happens in politics and economics, they're the ones that have gotten in special codes to or special tax provisions. They continuously change the tax code for their own benefit. That's what really has made it so complicated.
And that's kind of a trickle down from just normal people as well. It's complicated so businesses can have write-offs and things like that. That it's also, even if you're just a Joe Schmo working at ABC Media Company and you have one single, maybe ABC Media Company and you have a kid or whatever, it seems just a lot more complicated. I mean, you help me out with my tax situation sometimes, and every time I seem to be it seems to get more complicated. But I'm trying. I'm trying better to be more organized.
Well, interestingly enough, the more complicated your tax return, usually the better off you are doing. So, I mean, you do really want a more complicated return,
Hmm.
because that means really that you're becoming more successful and that you're now dealing with some of the more intricate provisions in the tax code.
Because you could have a consistent income from a job, and then you might have some stock investments or passive income, or maybe
Real
an inherit.
estate, if you have
inherit.
real estate, there's a number of complicated rules regarding that.
Um, so yeah, on that note, if you were to say that you have a specialty or a forte, what specific uh, division, it's part of the tax code or type of client that you help out, what would you say that is more your forte?
Well, one of the things, I mean, I certainly work in a wide range, certainly as most accountants do, and I have a wide range of clients. But a lot of the clients that I now work with are independent film producers.
And on paper, that would technically be like a 1099.
Yeah, well, most of them have partnerships or limited liability companies, which they do the work through. Um, but yeah, they essentially are independent contractors.
So what's the difference between being in a partnership or a LLC when you're reporting taxes? I guess what if you're like a one or two person film company?
Well, so an LLC can be a single member owned LLC, or it can be have multiple partners. If it has multiple partners, then it has to file a partnership return, which then is considered a flow-through entity. So all profits or losses and income or deductions flow through to the partners individually. If you are a single-membered LLC, then you don't have to file a separate partnership return, and it actually all income and deductions flow. They still flow right through to you individually, but they're reported on your personal return, and your personal return and your LLC are one in the same.
Okay, I see. And people make LLCs. Is that more for legal protection?
Exactly, more for the legal protection of protecting your personal assets against the company liabilities.
So give us a specific example. It doesn't need to be from your personal experience, but a specific example where if something happened, I guess, in a film, a film company, a construction crew, where having an LLC would be important.
Well, a lot of those LLCs, I mean, it's really just the chances and the risk that you have of getting sued from someone from you doing a bad job or something getting messed up.
Like negligence or something.
Typically, for a film production company, I mean, you just want to be able to allocate the profits between between the partners, and you want a written agreement that says as to who gets the profits, who has to provide the capital.
Okay.
A lot of times, these people are creating LLCs amongst their friends, and they're doing businesses amongst their friends. And a lot of times, you say your friend won't really screw you over, but as we kind of know, a lot of times that does happen.
Money, more problems.
Money always creates problems. So you do want to have like some legitimate agreement between people, so that if there is an argument, that you can at least go back to that original agreement. Typically, LLCs, a lot of property is held in LLCs, and that's where you really get into the liability issues. Since as you very well might know,
Yeah.
a lot of things can happen, and a lot of liability can happen with properties if someone gets hurt on your property, or there's a fire, or there's something that happens with the property, then someone could sue you.
Yeah, well, I mean, specifically in New York, in Brooklyn, when you're a landlord, sometimes I deal with small individuals. They might buy a two-family brownstone, like in Bed-Stuy, and they want to rent it out because that's people want to invest in real estate long term. And sometimes you realize that if you're a landlord and you do something silly like the front step breaks and then your tenant falls down, and they find out that your building is in your name, that might be a little bit of an issue.
Yeah, so then you could certainly get sued, but as long as you at least have it in a limited liability company, then they can only at least take the assets that are in that company and protect your personal assets. Especially if you also own multiple properties, then you want to keep each property in its own LLC, so that the assets in the other property, especially mostly your house, mostly the other properties, the actual property and the actual house value, they can't go after that house to go after liabilities from one LLC or one property that is getting sued for.
So for instance, if you didn't, an example, on First Street you have a rental property and you didn't put up a proper guard and someone fell down, if they find out that you have something on 7th or 8th Street, they can come and try to get that as well?
Yeah, if they were to sue for a lot of money and win, and you didn't have enough to cover it in that first property, then they could go after all the other properties. Unless they were all in LLCs, then you have a separation.
Interesting. Well, that's good to know. So any of the real estate clients I'm dealing with, and you haven't taken any of the advice I gave you, we have a verification over here from an accountant as well. Moving on, I was thinking that the last couple of years the share economy has become a lot bigger. I feel a lot of young people in their 20s to 30s to 40s have multiple streams of income, or they're independent contractors, and a lot more people are moving away from having their sole employment from AmeriCorp or some sort of big corporations. What would be the most common thing or most common problem you see with independent contractors or people starting their own business that they run into when hold on, it's emergency?
There's an emergency. Hopefully a building hasn't burned down.
Yes, let's
Hopefully
hope.
someone's not getting sued. hopefully they have an LLC.
Yeah. So what's the most common problem you see of people starting their own business, or they become an independent contractor from a third party like a film company or a real estate agent? What's the most common problem people run into with reporting their taxes or doing their bookkeeping?
Well, one, to start off with, it's way more beneficial to be an independent contractor than to be an employee. The leeway you have in terms of taking certain business expenses and the ability to take those expenses are much more beneficial as an independent contractor. Um, but more in the biggest problem that I see year after year. Well, there's two big problems, but the one big problem is that the people do not maintain the records that they should be keeping. A lot of the times I'll get clients at the end of the year and they want me to figure out their expenses and they want to figure out the activity and the business expenses and the business income, and they've done no record keeping, and we have to go back 6 months, a year, and we have to figure out what they were doing a year ago, and what those expenses were, to figure out what we can actually deduct. And it's so much more difficult to do it and test people's memories from like a year ago than if they had kept some adequate record keeping.
I mean, I don't know where. I don't know anybody like that.
Who keeps records?
No, I'm just joking. I'm just joking. In,
Yeah.
if you've been listening to the podcast, you know I work in real estate. So, a lot of times, real estate agents are independent contractors, and there's a lot of variables. Transportation, advertising, things like this. I've been learning through my experience with Nathan. He's been teaching me a lot about proper bookkeeping, and I've been improving, I think.
You have been improving, although it's still a ongoing process.
Life is always a work in progress.
It is always a work in progress. It's like, but yeah, you don't have to do it on a daily basis, not even on a weekly basis. But even if you were to start just a general track of your income and expenses, especially your expenses, on a monthly basis, then it'll be way easier at the end of the year. A lot of times, also, it seems a lot more daunting when you have to do all the full year at the end of the year. First, when no one really wants to do the accounting. I mean, that's why they didn't become accountants. They did a different kind of a business. So a lot of times they'll just then avoid doing it because now it seems like it's too much work. But really, if you were to do it on a monthly basis, then it would seem a lot easier, as well as you wouldn't have to now go back and remember, unless you're have an incredibly good memory, which most people do not have. Or if you have a photographic memory, then you might be all right. But other than that, you need to at least track it generally to have an idea of what you were doing a year ago, because no one knows what they were doing a year ago.
Yes, memory. Your memory seems to change as time goes on.
It does, well, especially as you get older, then you really kind of goes downhill from there.
So if you were to, is there any sort of programs online or apps or sort of processes that you could suggest to somebody who's running their own business to kind of keep better track of their accounting? Or is it just like a calendar reminder? Is there a certain app or a website that helps out a lot? Do you have any suggestions?
Well, certainly like QuickBooks is one that's used mainly by accountants for bookkeeping. And QuickBooks has gotten a lot simpler. Now they have QuickBooks Online, so that you can just go log on to a computer and you could then access it anywhere from any device. And QuickBooks has also gotten a lot simpler, which I don't like, because I like the more accounting aspect of like a debit and credit. But they've now made it much more simpler, where they're now just they'll guide you through the process of recording your income and expenses. They'll actually now allow QuickBooks to be connected to your bank account, so that they'll automatically record transactions. And it's made it a lot simpler to do that record keeping. So I would certainly recommend QuickBooks. But if you're not going to do that and you still find that too difficult or too complicated, then even just recording it on on an Excel worksheet,
Google Docs or something
like that, where you can then just still record the expenses that you're incurring, and just simply categorize them.
Sometimes I use mint.com, but then I always get some conspiracy theorists talking to me about how they're watching that data and selling it to other companies, which I don't necessarily like.
Well, I know you don't like that part of it also, but also in the fact that I've seen you use mint.com, and I don't really like it either, because all you do is send me some mint.com and it shows that you have some wide category of meals and entertainment, or entertainment in general, or travel, and it has nothing to do with your business expenses versus your personal. It doesn't break it out. And then you somehow think that you've now categorized things correctly, and it hasn't done anything for accounting purposes. So I would not recommend that, because it still doesn't break out your personal life to your business. A lot of the problems we see is that people Well, and another good thing you should have is a business bank account where you're doing all your business transactions through one account.
Simplify it.
A lot of times people use a personal account and a business account, or just a personal account, and they'll record their which they're using their life expenses as well as their business expenses. And now it makes it an impossible job to figure out what's business and what's personal, and that really needs to be separated.
Yeah, that's a good piece of advice.
That's
It's solid.
something that you have done.
Yeah, solid. I'm gonna get a little more coffee. Let's take a little break for a second, and then we can come back and talk about not my personal situation, and then talk about kind of big picture with the country and
Well,
how our accountants.
Well, as you say that, there's one other big thing that people should remember is
Oh,
that,
sure.
especially as independent contractors, is that while you don't have to remit tax during the year, although you should pay estimated tax payments, you do need to realize that you will owe tax at the end of the year, and you do need to save money to make sure that you can pay that tax.
Well, that before we go to break, that's a big thing because I remember the star of $1 Million Listing. What's his name? Luis Ortiz, I think, or I can't. I think that's his name.
I might have heard of him.
Yeah, he. I guess he's from. He was originally. He didn't understand the concept of that he wasn't paying taxes because he's originally from Puerto Rico, and he ended up having to pay like a couple $100,000 at court because he just didn't have any idea. But to their defense, most real estate brokers will teach you that you need to be paying your taxes. And I would always suggest pay. I always suggest an automatic payment where you don't even see the money because you don't even want to hold on to it because then it just makes it harder to let go of.
It does make it way harder to let go, and especially if you have a large tax amount at the end of the year, it will come at a surprise, and it'll be a lot. It'll just that hit will hurt you so much more than had you just saved a little bit on an ongoing process.
Exactly. I'm gonna grab a little coffee for a second. I'll be right back. Oh, and we are back for part 2 of Nathaniel Sloat's advice on taxation to help the little man figure his accounting out.
Well, I also got a random question for you now.
Sure.
Because I don't know if you've heard of the town Sloatsburg.
In New York, right?
Yeah.
Yeah, of course I've heard of Sloatsburg.
So I've been considering, I have a little thought about this, is that I should change my last name to Sloatsburg.
Why?
I think it'd be pretty cool. What are your thoughts on that?
So you want to turn into Sloatsburg because it might be in line with more of the traditional accounting names?
I think so. Do you think it sounds a little more officially accounting?
Yeah, I do.
It's my girlfriend also likes the name Sloatsburg.
Or a Steen at the end as well. It could be Sloatstein.
Sloatstein. Well, I think I should maybe sound a little more Jewish as an accountant. Which in a more interesting note, which is kind of reverse anti-Semitism. Once people find out that I'm Jewish, they trust me a lot more to do their accounting.
Well, you're Jewish, but you're not technically a practicing.
I'm not a practicing Jew, but still Jewish and still proud of my roots.
Yeah, you listen. In the day and age where it's a melting pot, it's good to keep it's good to keep your identity and your cultural heritage a little bit.
You gotta maintain that family heritage.
Gotta. So, we were talking small picture before. Now we're gonna talk a little bigger picture. We were talking. There's a lot of headlines in the news about Trump doesn't pay any taxes, or this corporation doesn't pay any taxes. The tax law is too complicated, and people are getting away. People who make billions and billions of dollars are paying very small taxes. And there's talk. So we were going to talk a little bit about mark-to-market accounting. What is this, and what's the problem with this?
Well, mark-to-market accounting, in a nutshell, one is that a typical accounting is on a cost basis.
So what does that mean?
The assets that you have on your books cannot be changed until you actually sell them. And once you sell them, then you can record an realized gain or loss on those assets, and you can change the value of those assets.
So give a specific example for layman's terms, people.
You had a building on your books, and it cost $100,000
to buy.
And 5 years from then, or then at one point you decide to sell that building for $200,000, then you can record that $100,000 profit.
Okay.
Mark to market accounting is essentially where you can change the value of the assets on your books by the fair market value of those assets. So now you still have that $100,000 building, but now you've deemed, for whatever reason, that now that value of the building is now 200,000. You haven't sell it, but you
Ah.
now can change the value of that building on your books to 200,000 and record a $100,000 profit, but you've never actually sold it.
Well, and that's a funny thing about real estate is that, at the end of the day, every asset at the end of the day, every asset that you have is only worth what someone else is going to buy. Someone else's worth is going to pay for it. So something like, from what you're saying, it seems pretty arbitrary. And if you're the one who's holding it and you're also trying to determine the value of it, then that seems a little arbitrary.
It does, and a lot of people are getting away with recording profits that don't really exist by doing such a mark-to-market election. Now, it's a lot of times the financial industries use the mark-to-market because they hold a portfolio of stocks. Stocks are held on especially if they're publicly traded stocks, then it's relatively easy to figure out the fair market value of those stocks at the end of the year.
Because
Apple,
wait, so it's because you can compare it against the stock market because it's something that everyone else can see,
exactly.
and they're paying for it right now.
Right, so you didn't actually sell it, but Apple went up or down. If you held Apple and then Apple went up, then fairly so, you should be able to record that your assets went up in
Okay.
your portfolio. Now this is fine. However, what people are really using mark to market for is to record assets that no one has any idea what the fair market value is, and they're making up the fair market value.
Such as,
So one of the prime examples of this was Enron, and what they were doing. And they were doing a lot of different things with mark to market. They actually held a huge party once they got the mark. You have to make an election to get mark to market, and then the government has to authorize you to be able to use that type of accounting.
so what do you explain in an election so only certain people can use this type of accounting?
Yeah, you have to make an election. A lot of people can do it, and most people on their taxes do not make a mark to market election. Mostly financial people. But you do have to make the election with the government, and you have to get authorization from them to be able to use mark to market accounting.
So why is it only available to certain people?
Well, you have to go through the process of making this election, and most people don't even think that they could use this election. Also, if your assets went down, you would have to record a loss on your books. But as a prime example of what Enron was doing, is that they were essentially an energy company, and they were building lots of power plants. But one of the things they would do is they would project that they were going to build a power plant in, say, 10 years. And they would then try to determine the value of what that power plant was going to generate and the future cash flows of that power plant to the present value and record it as an asset on their books. And they would, rightly so, they would calculate the future cash flows of what they projected the value of what this power plant would generate, and then they calculated those future cash flows back to the present value. Because a dollar today is still worth a lot more than a dollar tomorrow. Is essentially the theory of present value. So they still did the right calculations, but what Enron really was doing is they had no desire to really build that power plant, but they were still recording profits in the current year by recording the future value of those cash flows.
And they didn't build it at all?
It turned out that they would never. They would, on paper, they said, and in their financial statements they said they would build this power plant, but they didn't really ever build this power plant.
That doesn't sound like good business there.
Sounds like a great business. You've now recorded tons of profits for something that you don't even actually have to do or actually have to build.
And so does this type of accounting still go on?
Still goes on.
And you were saying that primarily financial institutions use this?
A lot of the financial institutions were also valuing, especially in the collapse of 2008 in the banks, they were also valuing their assets at fair market value, but they were doing these collateralized debt obligations and these mortgage-backed securities, which no one could understand how to value them, and they were valuing them at much higher than they really were valued, and that was using the mark-to-market accounting. But going back to the Enron thing, now you've recorded You've recorded this large asset and these profits on the books. Once you record the asset, you can record profit. And once you record the asset on the books and you record the profit, you still now have one big problem, is that you don't actually have the cash from this. And to record these, and once they recorded profits, the executives and the officers were able to record bonuses, and they were able to pay off bonuses to themselves for these profits. Now you still need cash to actually pay out these bonuses, because you don't actually have any cash in this business.
Yeah.
What Enron was able to do is they created these partnerships called special purpose enterprises. These were partnerships with enormous banks, the biggest banks at the time, which are still in existence, and the big banks funded these partnerships. So these partnerships bought the receivables off Enron,
Okay.
and funded the cash that Enron needed to pay out the bonuses and to fund their daily operations. Now, how did they convince them to get all this cash? Is that these partnerships were backed by Enron stock, which at the time was a huge company, was a great profitable company on paper, and the big banks were certainly very happy to fund these partnerships, buy the receivables, and they would get then a percentage on top of whatever the receivable was plus some interest rate.
And from my understanding, is the reason they're doing this accounting is so individuals can get paid out better bonuses because of the performance of the company, or are they trying to save money on tax and to pay to the government?
No, nothing on the taxation. They're really just trying to record profits that don't really exist.
So I mean, in a hypothetical situation, it's for instance, the CEO might get a bigger bonus, or if they're preparing to sell the company to a larger organization, you be recording more profits, more income than is actually there. So, for instance, if ABC company wanted to buy Joe Schmo's trucking business, if Joe was doing this, the company might appear to be more valuable than it actually is.
Yes, but more the biggest thing in this was to record profits in the current year so that you could pay out bonuses. I mean, say you're doing these legitimate businesses, you're running power plants, and they're not. I mean, they might be profitable, but they might not be so profitable. Say now, and you want to pay yourself a $2 million bonus, just as I was saying in my example before, just pretend that you're going to build this power plant. Say that the value of the power plant is $2 million, or the present value of the future cash flows of this power plant is $2 million. You then record a $2 million profit in the business, and from that $2 million profit, you pay a $1 million bonus to yourself.
Oh, because in your contract you say, oh, if the income or the profits are above, X, Y, Z, then I get paid this amount.
Sure. So now you pay out. Now you just made up $2 million of profit.
That's some mathematical magic right there.
Again, Enron, when they literally threw one of the biggest they just threw a huge party once they got the election to do market to market. They knew they were going to make tons of money. You still have the issues with the special purpose enterprises and these partnerships that they made with these big banks that were funding these partnerships lost billions and billions of dollars because it was just all made up money.
Just a piece of paper, man.
The other most brilliant thing that Enron did was that one way to get this money to fund your business was to take debt out. But they by getting the banks to fund it through these partnerships, they showed no debt on their books. So the company looked extremely good in all the business ratios and economic ratios.
So they're almost like outsourcing their debt or putting it on a different. Okay.
They just put it on these partnerships. Also, if they were to buy buildings or power plants in for real, and they had huge mortgages, instead of Enron showing these mortgages on their books, they showed it through these partnerships. And then the partnership would then lease. Instead of the partnership would have the debt, but then they would lease the building to Enron. So Enron just showed a operating expense, where the real debt of what they had was really through these special purpose enterprises. Now, you would think that you could catch these people and that you could see the debt because it was coming from this partnership. But Enron created hundreds and hundreds of these partnerships, and each one then owned the debt of the other one. And so they just hid it. Similarly to essentially the game of, I forget what the name of it is, but the game where you show the king and then you try to hide it through the 3 cards. and someone has to guess which card it is, but you really have one up your sleeve.
Oh man.
You know that game? It's pretty much the street game.
Oh, with the cups.
Yeah, with the cups. And you
Ah,
try to
yeah,
do
yeah,
it.
yeah.
So Enron just played that game with money, and they just kept on transferring money around and around. They didn't really have all the money, but every time they would just continuously show, they would continually just hide the money through different enterprises.
So my big question is that after everything that happened with Enron, and it seems to be completely based on this type of accounting, why is it still legal?
That's my question. I think it should become illegal.
And has there been any like in the last year or 2 years? Has there been any push to at least regulate this or update it at all?
No one really has learned from this. I mean, unfortunately, the smartest people are the ones that are usually doing these schemes, and the people who are trying to catch the schemes are not, especially in the fact that they get paid a lot more money.
Yeah, well, that I always find with any sort of government organization, like to a certain extent, they just don't have the resources or the manpower or the money to keep up with people who are paying their employees or their accountants or whoever, 7 times more. So there's more of an incentive. There's less of an incentive to track it down.
No, there's way more incentive on the side to cheat because that's where all the money is. So that's where you get the smartest people. The people who are trying to catch the cheaters don't get paid nearly as much, and so they're not as smart, and nor do they have the incentive to actually catch people. So always the cheaters are the ones that are a step ahead. One of the biggest problems that happens, and one, as you were saying, like, are they going to do anything after the Enron scandal? But then the big banks were still using mark to market, and it was a financial collapse to do the same thing. So typically, no one really ever learns from these mistakes. One of the other biggest problem is essentially collusion. Enron had a big public accounting firm doing their audits, and Arthur Andersen knew what was going on. They're the ones that are designed, and they're supposed to be a separate third party to catch any fraud that Enron is doing. However, they were in direct collusion with Enron. Enron at their heyday was paying Arthur Andersen $1 million a day to do their accounting. They were also paying their legal firm $1 million a day.
So, I mean, I always wonder about this. Like, what's the repercussions for doing this? I mean, some people went to jail, right?
I believe one person went to jail. One of the main guys who did this and made hundreds of millions of dollars in Enron left a year or 9 months before everything went down. So he was actually pretty smart because
he knew it was going down.
He knew exactly what was going down. He knew things were going to fall apart, and he literally left the company, and then you couldn't really blame him because he was like, well, everything went down in the 9 months that I wasn't there. It wasn't my fault. It was clearly his fault. But I think one person really went down, and they went to like white collar prison anyways.
And they're probably out now.
I mean, they ruined hundreds of thousands of people's lives. They destroyed pensions. They destroyed all their employees' lives. They destroyed all the people they destroyed all the banks lost millions of dollars, which then flowed through to all the people that held money in those banks. And they probably ruined millions of people's lives. They destroyed the retirement funds of a lot of people. And that somehow was not such a crime of if you just rob someone. Like, you'll get a much larger sentence than if you did a financial crime.
Or even like a stick up at a deli. If you're just trying to rob somebody.
Yeah, you might get 10 years in prison for that, where these guys, had some probation.
Listen, I always think that we have all these superheroes like Batman who want to catch like the gangster criminals. We need like a white collar superhero to like glorify, like a glorified accountant that could with a cape.
I like that. I like that a lot.
Maybe it could be you.
Oh man, I mean, listen, I've been trying to figure out what I really want to do in my life. Like, this might be it.
You be the white collar accountant superhero.
However, you're also going after some of the most powerful people in the world. They literally I might not be here. I mean,
well, maybe we can make a couple shell companies so they won't ever find out who's. You can shell yourself against their shells and then.
Yeah, and go that way. I feel like you'd have to be protected, but. Yeah. No, that'd be like we need someone to be able to do that. And then also in another example of collusion, I mean, the big banks in 2008, they were rating all these bonds at much higher than they were supposed to, but that was like Standard and Poor's, and they were also supposed to be a third party that was supposed to independently rate these bonds.
Yeah.
But as they openly admit, they were the only ones in the game, and in order to rate them, they had to follow what the banks wanted them to do. And so while people were trusting the ratings of Standard & Poor's, which they should, they were in direct collusion with the banks. And so so really what it creates is, you need if people are colluding with each other, it's almost impossible to catch this fraud, which is unfortunate.
Well, the best crimes are never done by yourself. That the Ocean's 11. There was 11 of them.
11 of them. So they were they were still all. Well, they should be colluding with each other because they were all working as a part. They were all working as partners.
Okay. Well, do you think there's anything on the horizons that's going to change this thing, or is there going to be maybe a new system that will come down the line in the future that might help this situation out?
As I know right now, I don't see anything that they're really trying to change.
Well, that's grim.
It's a little grim, but certainly at least certain the Democrats and liberals are certainly trying to create more protections against the financial industry and against certain industries to make sure that collusion can't happen or that big banks can't just run wild. But again, the people in power are really these big banks. And so they're spending a lot of money trying to avoid any type of protections. And also maybe you really can't change if people are colluding with each other. And public accountants are supposed to audit companies and make sure that they're doing it correctly. Mm. And if they are colluding with each other, then it's almost impossible to try to correct to find that fraud.
Yeah, and also it just when certain practices have momentum and many people are involved with them, it takes a lot. It's much harder to stop a system when it's so many people riding the wave versus one rogue person who has some dubious intentions.
Yeah, when everyone's in on it, then it kind of just lets it ride. It looks all good, but at some point it's gonna all fail.
So that's. Well, hey, listen, that's going deep right there.
Going deep. I really think they should just outlaw mark-to-market accounting. It's been taken advantage of too much. And if they were to outlaw it, then it'd be much simpler to track what people are doing. Again, Enron was just making up. I mean, they literally said that Enron would make no profits, and then at the end of the month, they would just profits would just be created. And no one knew how it was being done.
So, are either of the presidential candidates are they talking about this at all, or I'm not following the politics too closely, but is this something that's on the agenda?
I haven't heard them talk about any aspect of that. Well, Trump just keeps on going back and forth between everything. You can't really know what the hell Trump's going to do. I mean, he does claim that he wants to build this wall, but other than this wall, I have literally no idea what Trump might or might not do as a president.
Well, also he's in real estate and developing, and probably moves a lot of debt around himself. He's probably got that involved with that. But
well, I also think because he's the one presidential candidate who has refused to provide his tax return. Which
why is that? Why do you think that is?
I think. One, I don't necessarily think he's doing anything illegal. He might be making aggressive positions with certain things, but that's still the job of accountants to do aggressive positions.
Yeah.
The thing I think is because his one big platform is that he's such a successful businessman, and what I think he's going to show on his tax return are lots of losses from construction companies, and maybe he's just reporting. I don't think he reports as much as he really claims that he's making. I mean, a lot of people claim that he made no money, and he claims he's made lots of money. To be fair, since he's private and it's not public, no one knows whether he's made or not made any money, whether he's made or lost money. Because everyone knows he started with a fortune from his dad, but we really have no idea whether he's made or lost money.
Does the president have to release their tax returns?
President does not have to release his tax return. However, it started with Richard Nixon.
Why is that?
He was the first person. So people thought that he was committing fraud or that he was doing illegal things on his tax return. And they wanted him to show his tax returns. And he was the one, which he actually proved. It came out that he did actually do a lot of fraudulent things. But when he was president, so there used to be a tax provision where the president could donate the presidential papers, like whatever letters or correspondence that he did as president. He could donate that to the presidential library.
After he leaves,
after he leaves, and he could take as a donation. He could take a large deduction on his tax return for the fair market value of those papers. Mm-hmm. This is fine. That's fine. That's not a problem because people can take charitable deductions on their return, and they can donate valuable things. Congress, while he was in as a president, they did deem that no longer should presidents be allowed to do this. They said that these presidential papers are actually the property of the American people.
Yeah, well,
And,
I know like the
it's not the president's.
Yeah, well, I know like the likeness. I do know that every election season you come out, like the likeness of a president is you can use that any way you want, right? It's considered the
Yes.
public good, or I don't know.
Public domain.
Yeah, public domain. Yeah.
While he was president, they changed the tax provision, said no longer can you can't take a charitable deduction for these tax papers because they weren't ever yours to begin with.
Yeah.
And it actually came out and they proved it that he actually backdated when he gave these papers away.
Mm-hmm.
He backdated it before Congress changed the law, and he then took a huge deduction on his tax return and paid. I think he made something like $400,000, but paid like $500 in tax. So the IRS had some big problems with this, and they were like, well, we want to audit you, and you need to provide us with all the information. And he was trying to avoid giving them all of this, and he was like, well, he had the famous quote of being like, well, we need to make sure that our president isn't corrupt, and which it came out that he was completely corrupt.
Hey, I always say when someone starts a story with true story, it's definitely not a true story.
Yeah, exactly. So he was like, we need to make sure that our president isn't corrupt and doing illegal things. So he did eventually cooperate with the IRS. However, they were actually able to identify the exact photocopy machine that he used to backdate those papers, and found out that he had actually backdated them and that he should not have been allowed to take that deduction, and he actually had to pay a shit ton in back taxes after they caught him. But he had been trying to avoid that, and he literally did corrupt things and fraud on his tax return. So after that, all presidential candidates provide their tax returns and to the public so that they can show that they're not doing illegal things. Now, interestingly enough, Trump is the only one that's not doing that.
Do you think he eventually will release it?
I think he'll have a lot of pressure too. I think what he's going to show, I don't necessarily think he's going to show that he's doing anything fraudulent, but he will show that he's just reporting lots of losses from a lot of construction companies or whatever failed businesses. He's going to show that he's not making nearly as much income as that he claims, and that he's not showing that he's nearly as successful as he is.
Well, also another thing could be kind of beneficial is that if he does bring his taxes out into the public, it could show some errors in the complicated tax system that he's not necessarily doing anything illegal, but maybe it'd be a catalyst for reform to simplify the tax code or make it more transparent, or maybe.
Yeah, it very well could show what the loopholes that he's getting through, because he obviously has incredibly smart accountants trying to do everything they can in their power to avoid paying tax, which is still their job to an extent, is to not doing anything fraudulent, but they certainly want to everything in their power to take certain positions. And then there's a lot of positions in the tax code that there's a lot of gray areas where they don't specify exactly what you should or shouldn't do, and you need to take a certain position.
Yeah, that's true. So I had some. We're getting towards the end of the hour here. We're gonna have a couple other questions that you might be able to answer, because who knew accounting could be so spicy and exciting?
It is actually quite interesting once you get into. I mean, for most people, they have one job and they just fill out a W-2. Or they receive a W-2 and they receive a tax statement and they just file their taxes. They might have a house and some mortgage interest, and some real estate taxes, maybe a little bit of charity, but it's really just not very exciting. The bookkeeping aspects of things are not very exciting. However, once you get into corporate taxation and you get into worldwide taxation, things can get very interesting, and there are a lot of different things that you can do to avoid reduce or avoid paying fairly to pay as little tax as you can.
So I was last year, I guess it was last year or the year before, I saw a news piece about tax return fraud. So on a private individual level, in this podcast, we want to teach people about things they might not know about and how to take a few gems and bring it into daily life. I saw that actually organized crime syndicates were actually because people delay paying their taxes in January, they would actually beat people to the punch and report or file their taxes for them and reclaim their return. Is this a pretty common practice?
Yeah, I have seen that a lot where they actually do. You'll take your social security number and then you'll file a return for them, get the refund, and then people will have no idea that a tax return was filed for them. And by the time, and they actually pay out. What happens is the IRS audits you. They'll send it. They'll send you your refund, um, and then they'll probably look at and then they'll audit you. Right now, the IRS is not really auditing very many personal returns because they're looking. The thing the IRS is really looking at is these foreign bank accounts where people are not reporting the interest or the investment income that people are earning overseas, and no one's reporting that money into the U.S., especially where they've gone into Switzerland. But back to that is, yeah, a lot of people will find your social security number and they will file a fraudulent tax return, and then now the people, when they do try to go file a return, they'll have a lot of difficulty filing that return because the government already thinks the return has been filed.
So how can you protect yourself against something like that?
Well, obviously, you just don't. I mean, you want to avoid giving out your social security number, but I mean, that's just a lot. I mean, it's hard because a lot of things are done online, and generally, I mean, if people are going to steal your social security number, then I mean, you have a lot. I mean, it's just essentially identity theft.
So I mean that's just basic. That's just basic on just being secure online with your credit cards, your social security, bank accounts, and address and things like that.
Yeah, exactly. Essentially.
So okay. So and then also another question is why if you have an account in Switzerland or you have it in I guess the Grand Caymans or why how are people allowed to put money in those accounts and not pay taxes on it?
Well, here, if you have an account, a brokerage account in the U.S., that brokerage account will create a statement, essentially an interest statement or a dividend statement or a capital gain statement, which will be sent to the government, so the government knows how much money, how much interest, or how much investment income you earned.
Okay.
If you do that in Switzerland, Switzerland is not required to send that similar type of statement. So the government has no idea that you've ever earned this money or not.
And that's just a state country law.
Yeah, no other country is going to send a U.S. tax statement.
Is there pressure on Switzerland to change that? Because I feel like a year or two ago there was a lot of Mexican or drug cartel money flowing through these banks, and they were trying to get places like Switzerland to be required to do that.
Well, at least now they have pressured Switzerland into giving up the names of people that U.S. citizens that have accounts in Swiss banks.
Mm.
So, and the only reason Switzerland did that is that they have a large presence. UBS, which is their main bank, has a large presence in the U.S. So the U.S. essentially said, if you don't give up these names, then we're not going to allow UBS to do any business in the U.S. So they were able to pressure them, and they got, and then UBS in Switzerland had to give up all the names. And once you know that you have these huge amounts of money in these accounts, you know they're earning interest, and then you can actually track. Then the U.S. is able to track it.
Hey, that's the only thing you can count on is death and taxes.
Death and taxes.
So, Guy, if you were to give a private individual one piece of advice to help them out with reporting taxes or keeping on top of it, or if they're in maybe they have back taxes, what would you suggest to them?
Well, certain people just like once they stop filing taxes, they start going year after year after year. They were like, well, now we haven't done it for 1 year, so now we're just going to not do it, and we're just going to keep on avoiding this. But more likely than not, the government is going to know that you are making money, and they have the statements, and they're eventually going to come after you, and they're going to come at you with a lot of interest and penalties.
Is there a statute of limitations for that? Like if they haven't caught you for like 10 years ago, can they still collect taxes from 10 years ago?
Well, if you haven't filed a return and you owe lots of taxes, then they can pretty much always come after you. If you filed a return, then the statute of limitations. So if you've essentially created fraud, then you can't just there's not going to be any statute of limitations. But if you filed a return, then if it's been like 3 years, then they will not come after you, and they will stop. They won't look at you. So that's one thing, is even if you don't really have too much money, or if you don't have that much income, you should still file the return so that the statute of limitations starts.
Ah, I see.
But again, if you've created blatant fraud, then they can still always come after you.
So, but you're saying that if you filed your returns but you didn't pay them and then they didn't collect them after X amount of time?
No, but they will come after you for that.
Sure. Okay. Well, listen. I mean, Guy, I think this is a very productive interview here. I had a great time. Thank you for your time. If people want to find you on the internet,
much obliged.
yes, yes. If people want to find you on the internet, maybe find you. Maybe they need a new account. How can they find you?
Well, you could always email me at my email address, which is Slowdanko, which is actually a combination of my two last names.
Yes.
Or Sloatsburg, if that now becomes changed, which I'm still very much considering. But right now, my email address is Slowdanko, SLODANKO @yahoo.com.
And we'll put some of that in the show notes. You're also maybe on the Facebook and things like that. And if they want to find you, they can contact us. We'll send them your way, help them out.
Also, a very interesting thing which has happened in the last couple of years, as you were talking about fraud, is that the one of the main schemes that's happening is that people will call you on the phone and say that you owe the IRS, a small amount of money.
I have heard of this.
And they do it. They've been doing it a lot, and they'll threaten that there'll be legal action or that the police are coming. And one thing to know is that the IRS will never give you a call. They'll always send a written correspondence, and then if you ever receive a call from the IRS, it's a fraudulent and it's a tax scheme.
I actually have heard of this on, like, I guess it was some NPR radio show where this was a threat that they were having as well.
It happens a lot, and right now they're being smarter because they'll say that like you owe like $546.02, some small amount of change, but they'll also threaten that you'll be put in jail or there'll be other serious legal action, which is not the case because the IRS gives you a lot of time to respond to certain notices, and they'll give you a time to pay it or even through an installment agreement. But the one important thing to remember is that the IRS will never give you a call.
That is good. That is a good last piece of advice there.
I think Archie also thought that was good advice.
Well, with that note, the dog's barking. It is literally at the end of the hour. Guy, Nathan, thank you so much. We'll be in touch. I'm so happy you came on. Maybe you'll come on again soon. Thanks to everybody who's listening. If you have any questions, you can just reach out to us in the show notes. We'll give you Nathan's email. We have my contact. And if you enjoyed listening to this and you want to hear more, rate, subscribe, suggest it to your friends on social media, and we will see you next time. Thank you so much.
Thank you very much.
All right. Thanks, guys. I'll see you later. Bye.